Yes, good morning students. How are you? All of you fine now? So welcome back to the next session of our economics class. So in this session we are going to learn the second method of national income accounting. Yesterday we discussed value added method, how we can calculate national income using value added method, and today we are going to discuss income method. So income method, otherwise it is known as distributed share method or factor payment method. Income method, distributed share method or factor payment method. So in the case of income method, national income is measured or represented in terms of factor payment to the owners of factors of production. So who is the owner of factors of production? Household. Then what are the factors of production? Land, labor, capital, organization. So you know the factor income. So in the case of income method, national income is the sum total of factor income which is generated by land, labor, capital and organization within the domestic territory of a country along with the net factor income from abroad. Okay, it is a sum total of factor income earned by resident of a country during an accounting year. That is known as national income in terms of income method. Okay, now we need to analyze what is factor income and what is transfer income. So in the previous video we already discussed factor incomes are earned incomes, whereas transfer incomes are unearned incomes. Okay, so in the calculation of national income we will consider only factor incomes. So coming to the classification of factor income. So mainly factor income we can classify as three types. Okay, first one, that is compensation of employees. Second one, it is operating surplus, and third one, it is mixed income. Okay, compensation of employee means income for labor. Okay, so this compensation of employee we can further divide into four types. That means compensation of employee include four elements. First one, that is wages and salaries in cash. Wages and salaries in cash. Okay, if an employer pay rupees 10,000 as a salary to his employees, so that will be included here. That is wages and salaries in cash. Second one, that is wages and salaries in kind. Okay, so sometime in some organization, the employer will provide wages or salary other than cash. For example, if an employer provide free uniform for his employee, that is the wages and salaries in kind. Otherwise, if an employer provide rent-free house for his employee, then that is known as wages and salaries in kind. Okay, and the third one, that is employers contribution to social security scheme. That means employers contribution to social security scheme such as provident fund. So keep in mind, here we will consider only the employer's contribution, not employees' contribution. So contribution to social security schemes are two types. First one, that is from the side of employer. He will provide some contribution on behalf of employees. At the same time, employees also will provide some contribution on the behalf of himself. So here we will consider employer's contribution, not employees' contribution. Okay. So while calculating national income, if you get employees' contribution to social security scheme is equal to rupees 200, then we will not consider. At the same time, if we get employer's contribution to social security scheme, that will be considered. Next one, fourth element of compensation of employee, that is pension on retirement. After the retirement of that a particular employee, then employer will provide some pension. So that is also a part of compensation of employee. Keep in mind, old age pension is there. That means the pension provided by or given by government to old age people. So that we will not consider in the calculation of national income, because old age pension is what? Transfer income. It is unearned income. But pension on retirement we will consider in the calculation of national income. So these are the four components of compensation of employees. First one, wages and salaries in cash, wages and salaries in kind, employers' contribution to social security scheme, and pension on retirement. And the second element of factor income, that is operating surplus. Otherwise it is known as income from property and entrepreneurship. Income from property and entrepreneurship. Okay, so this operating surplus include three elements. First one, that is rent and royalty. What is rent? Compensation of land. Okay, what is royalty? If we use patent of other company or anything, then we need to pay some money, that is known as royalty. Then second one, that is profit. Third one, that is interest. Okay, so operating surplus include three elements. First one, rent and royalty, second one, profit, and third one, interest. Okay, and again this profit is divided into different kinds. Okay, so profit is split into different kinds. First one, that is undistributed profit. Undistributed profit. Okay, so that is known as retained earning. So here the producer of the employer or an organization will keep some amount of profit for future use. That is known as undistributed profit or retained earnings. So that is a part of profit. And the second one, that is dividend. Dividend means return on share. So the producer need to pay dividend for his shareholders. So that is a part of profit. Next one, corporate tax. Corporate tax means tax on profit. Okay, so these are the three elements included in profit. First one, undistributed profit, second one, interest, and the third one, undistributed profit, second one, dividend, and the third one, corporate tax. So that is the second element of factor income, that is operating surplus or income from property and entrepreneurship. And third one, it is mixed income. Mixed income means income of self-employed person. Income of self-employed person. For example, suppose individual A, he started his business in his own land. In his own land, and he contributed his own capital for starting this business, and now he is working as a laborer in his own business organization. That person, individual A, he is the owner of that business organization, and he started his business in his own land, and he started his business by using his own capital, and now presently he is working as one of the labor in that business organization. Okay, and at the end of the year, each and every year, he is getting rupees 10 lakh as the revenue or return. Rupees 10 lakh as the revenue or return. So what is the name of this 10 lakh, or what is the name of this revenue? Whether it is compensation of employee, or whether it is rent, or whether it is interest, or whether it is profit. What we can call it? We cannot call it as rent, interest, wage, or profit, because this 10 lakh included wage, interest, profit, and rent. It is the mixture of all the factors of production, because this 10 lakh included rent of his land, this 10 lakh included interest of his capital. This 10 lakh included wage or compensation of employee of his own labor power, and this 10 lakh included profit of his entrepreneurship. So we cannot divide this 10 lakh into these factors of production. So it is a mixture of wages, interest, profit and rent. Okay, so that's why this income is known as mixed income. Okay, that's why this income is known as mixed income. Got it? So these are the three factors of production: compensation of employee, operating surplus and mixed income. So while using good morning students, income method for calculating national income, you have to keep in mind one important point. Here, wages and salaries in cash, wages and salaries in kind, the employer's contribution, social security scheme, then pension on retirement. These are the elements of compensation of employees. Okay, suppose in question it is given that compensation of employee as 5,000. In question it is given that compensation of employee is equal to 5,000. At the same time, in the same question it is given that wages and salaries in cash is 1,000 and wages and salaries in kind is 2,000. Okay, so while calculating national income or domestic income, if compensation of employees is given in question, then no need to take care of this wages and salaries in cash, wages and salaries in kind, employers contribution to social security scheme and pension on retirement. So we need to take only 5,000. Don't include this 1,000 and 2,000 because this 1,000 and 2,000 is already included in this 5,000. Okay, at the same time profit is divided into three parts: undistributed profit, dividend and corporate tax. Okay, so if dividend is given as 2,000 and the profit is given as 5,000, so in this case don't take care of this dividend, we need to take only profit because this dividend is included in this profit. If profit is not given, only dividend is given, so we need to take this dividend. At the same time, in the case of operating surplus, profit is included, rent and royalty is included and interest also included. And in question it is given that operating surplus is equal to 10,000. At that time don't take care of profit, rent, interest because this profit, rent, interest are included in this operating surplus. Now we can discuss how we can calculate national income using income method. So firstly, classify factor income and add all the factor income. So if we add all the factor income which is generated within domestic territory, what we will get? Domestic income. What is another name of domestic income? What is another name of domestic income? NDPFC. So what are the factors of production? That is what are the factor incomes? That is compensation of employee plus second one operating surplus plus third one mixed income. Compensation of employee include wages and salaries in cash, in kind, pension on retirement, employer's contribution. Operating surplus include rent, interest and profit. Then mixed income. So if we add all this one, what we will get? We will get NDPFC. That is equal to NDPFC. This NDPFC is our domestic income. Then what we need to calculate? National income. What is the name of national income? That is NNPFC. How we can calculate NNPFC? From this NDPFC, just add NFI-FA. So this is the method of calculating national income using income method. First add all the factor income, then we will get NDPFC and add NFI-FA along with this NDPFC, then we will get NNPFC. That is our national income. Okay. So while using